BlackRock's chief investment officer calls for a bold Fed rate cuts. Listen, he wants 50 points gone, ladies and gentlemen. All right. He wants 50 points gone. Now, before we dive into this, right, let's look at the probability of there even just being a rate cut in general. Now, we're going to be looking at two sources because I did have more sources pulled up, but they all practically say the same thing, right? As of right now, on FedWatch, we have a 92% likelihood of dropping 25 points. Okay. Of dropping 25 points, right? Dropping 50 is a low rate, but staying the same, ladies and gentlemen, is non existent at this moment, right? Being at, this current rate is 0%. It has been 0% for some time, right? I guess in the beginning of September, still 7.3% chance. I know some people were upset and crying that, it's not 100, it's not 100, but it's like, dude, you know, just go with the evidence, just go with the evidence. But look, man, 92% chance of there being a rate cut for 25 points and 8% chance for 50. So practically they're saying, okay, there's going to be a rate cut. Okay, that probability of there being a rate cut is extremely, extremely high. Now, obviously, this isn't technical, this isn't just from Jerome himself. This isn't technically confirmed. But I mean, when you have these types of numbers, you really just got to look at the probability. And we can see, ladies and gentlemen, same thing with here, right? Almost 94% from this website, right? A week and 1 day from now, we're going to know pretty much if we're going to have rate cuts. The answer is probably like 99.9% chance yes, but will it be 25 points or will it be 50? Now, here's the thing, right? The BlackRock did say they want 50 points. Now, that doesn't necessarily mean it's going to be 50. Sometimes it comes out as a surprise, but we obviously will have to monitor everything. But look, 94% chance here, 92% chance here. The other sites also said pretty much 90+% chance for there being a 25-point drop. I've seen multiple sources, ladies and gentlemen, that have said there should be a rate cut no matter what. But yeah, let's read this, right? Let's read this. Let's look at Bitcoin. Let's analyze some of the history as well. And we're going to start doing these videos again where we talk about news, where we talk about certain data points. And of course, we still look at the charts a little bit, but this is going to be more news heavy. So we can see, right? The financial area is experiencing a shift with BlackRock's chief investment officer urging the Federal Reserve to slash interest rates by an eye popping 50 basis points. But what does this mean for investors and how could the volatile cryptocurrency space react? In the midst of all the fluctuations, grasping the full impact of Fed rate adjustments is paramount, particularly as concerns about liquidity and sustainable market stability loom ever larger. Well, I don't know if there's concerns about liquidity, and I don't think anyone's really too concerned. Why, we're just getting started. You got to remember this is written by someone. This is written by someone. That's why I have all these like fancy words in here. It's like, bro, just get to the point. Anyways, the rationale behind 50 points or 50 basis points, right? Look, they're looking Fed rates cuts isn't merely speculative. It emerges from real anxieties about impending economic slowdown. By advocating for a significant reduction, BlackRock suggests the prevailing monetary policy may be overly constricting, potentially choking off the lifeblood of economic expansion. Lower interest rates mean cheaper loans. Okay. So this is good, right? We know lower interest rates practically mean pumps. It's practically a sign for the market to be like, okay, more money, lower interest rates is very, very positive news. Every time we've had interest rate cuts, they were always good, ladies and gentlemen. They were always good. I think the last time we've had one was what, practically a year ago, no? Like roughly 10 months ago, which is crazy. It's really crazy to think about. But I mean, the whole Trump thing, the whole Fed thing, they've been against each other for some time. It's the internal drama with politics in America and the federal rate cuts. I mean, it's just classic business. It's just classic business. But yeah, so we can see, right? Lower interest rates mean cheaper loans for the both customer and customer spending and business investment. This strategy is about reigniting the engines of economic activity and nurturing an environment primed for growth. Economic signals driving the demand. Under underpinning this bold proposition are various critical economic signals. Metrics such as inflation rates, employment statistics, and consumer confidence play pivotal roles in molding monetary policy. The Fed often adjusts interest rates in reaction to these indicators, especially when indications of economic lethargy surface. For example, an easing of inflation could lend weight to calls for reduced rates, crafting a more hospitable environment for investments that prioritize growth. So yeah, so we got that. The specter of declining inflation may embolden decision makers to act with urgency as economic conditions evolve. The Fed's interpretation of these data points will significantly influence its direction, necessitating that investors remain vigilant and proactive. What lower rates mean for financial markets? Okay, this is the most important thing. What do lower rates mean for financial markets, right? See the cryptocurrency surge, right? So we can see, right? Lower interest rates sends ripples throughout the financial markets, often producing uh, far reaching consequences. Stocks in focus, we don't care. Bond market dynamics, we don't care. But look, ladies and gentlemen, fascinatingly, rate cuts can propel capital towards higher risk assets like cryptocurrencies. With traditional bond returns losing their luster, a wave of investors often pivot towards the tantalizing prospects that digital asset present. This capital migration could not only inflate cryptocurrency prices, but also pump up liquidity in the market, particularly in times of fluctuating monetary policy. So we know every time there's a rate cut, it is very, very, very good. Now, look, it doesn't mean we're going to get 50 points, right? It doesn't mean we're going to get cut by 50 points necessarily. But what I do know, ladies and gentlemen, 25 is practically guaranteed. And that is more than good enough because it is even said that we could potentially be seeing this and two more rate cuts by the end of the year, which would be absolutely fantastic. Now, here is the deal, people, right? I believe this week and next week we might see a little bit of manipulation. And the reason why I say this is because, rate cuts equal green flag. It means go, 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 go. Okay, so if we do see some kind of decline, don't get too worried, right? Do not get too worried. Do not get too stressed out, right? At this current moment, we do have very wonky price action, but we can see, ladies and gentlemen, that historically, every time we start kind of getting wonky price action and it holds, we see a huge burst in momentum. So very, very well, that it's very possible that we can get something like this depending on the daily, right? But we could also see some probably type of manipulation before we go down. So we're obviously going to be monitoring how the daily closes and how everything reacts because we can see every time there is some type of manipulation to the downside, we get an upside reaction. Manipulation to the downside, upside reaction. I mean, it's just classic manipulation to the downside, upside reaction. So, we will be monitoring how Bitcoin and everything is going to react. Overall, it should be very positive. Even if it looks negative for a day or two, it's just most likely going to be manipulation. So do not get worried. Do not get stressed out because things are going to look very, very good when the rate cuts do happen. Okay. And like I said, you know, even if the rate cuts, here's the thing I notice sometimes when the rates cut in the middle of the week, the Tuesday or the Thursday and the Friday, they still might be a little bit slow. But then it's next week that really pumps. So we could start seeing a movement actually towards like the end of September. Something we also have to note, ladies and gentlemen, is that we are coming to a close slowly with the last month in the 3 month candle, right? September is the last month in quarter three. So we are almost at quarter four. So we are going to be paying attention to absolutely everything. At this current moment, the 3 month candle doesn't look the healthiest, but that's okay because we still have roughly 3 weeks left. But that is going to be it, ladies and gentlemen. I hope you guys enjoy, and I'll talk to you guys next time. Goodbye.